This is the most effective scalping strategy you can use with just 2 free Tradingview indicators. Hello everyone, welcome to the Scalping Day Trading FX channel. The trading strategy that will be discussed in this video works well if you want to use it for 1-minute scalping, 5-minute scalping, and 15-minute scalping. In this example, we will show you how to use this scalping strategy on 15-minute crypto scalping. However, in addition to trading crypto, you can also apply this scalping strategy to various assets such as forex, gold or xauusd, stocks, and many others. So, make sure you stay tuned until the end of this video. And don't forget to support us by liking and subscribing to this channel. Let's get started. To use this scalping strategy, you can start by going to Tradingview. Next, go to the Indicator Search tab. In the Indicator Search tab, type Triple Confirmation Kernel Regression Overlay. Then, select the Triple Confirmation Kernel Regression Overlay from Quantrasystem. After that, adjust the settings of the Triple Confirmation Kernel Regression Overlay indicator. In the Input tab, leave the indicator at its default settings. Then, go to the Style tab. In the Style tab, uncheck the boxes for mid and background color. Once done, simply click OK to confirm the changes. This Triple Confirmation Kernel Regression Overlay indicator will be used as a trend guide and to identify oversold and overbought areas in the market. If a navy-colored cloud appears and the candlestick is also navy, it signals a bullish trend. On the other hand, if a purple-colored cloud appears and the candlestick is also purple, it signals a bearish trend. Next, if the price candlestick is within the navy-colored band area, it indicates that the price is in an oversold area. In this situation, your main focus is to find the best point to place a buy entry. Conversely, if the price candlestick is within the purple-colored band area, it indicates that the price is in an overbought area. In this situation, your main focus is to find the best point to place a sell entry. Now, let's add the second indicator that will be used as a guide for placing entries in the market. Go to the Indicator Search tab and type RSI or Relative Strength Index. Then, select the default RSI from Tradingview. Now, let's set up the RSI indicator. In the Input tab, leave the indicator at its default settings. Next, go to the Style tab. In the Style tab, uncheck all the boxes except for RSI, RSI upper band, RSI middle band, and RSI lower band. After that, customize the colors of the RSI and the other elements to your preference. Once done, simply click OK to confirm the changes. This trading strategy will use the bullish divergence and bearish divergence patterns from the RSI indicator to place orders in the market. A bullish divergence occurs when the price forms a lower low or a new lowest point, while the indicator forms a higher low or a new low point higher than the previous low. On the other hand, a bearish divergence occurs when the price forms a higher high or a new highest point, while the indicator forms a lower high or a new high point lower than the previous high. Now, let's discuss how to place buy and sell orders using these two indicators. How to place a sell order. If the price candlestick is in the overbought area and the trend is bullish, observe the price movements that occur. If the market structure forms a pattern of a high and a higher high, pay attention to the RSI indicator's movement. If at the same time, the RSI indicator forms a high and a new lower high, this is a sign of a bearish divergence. To confirm that this is a valid bearish divergence, you can draw a trend line from the high to the higher high on the price candlestick, and also draw a line from the high to the lower high on the RSI indicator. If everything is confirmed, you can wait for the trend to change from bullish to bearish. If the trend changes from bullish to bearish, indicated by the candlestick color changing from navy to purple, make sure the RSI signal line has crossed below or is below the middle band line. If all conditions are confirmed, you can place a sell order after the candlestick closes. Place your stop loss at the last swing high. Use a target take profit with a risk and reward ratio of 1 to 1.5. How to place a buy order. If the price candlestick is in the oversold area and the trend is bearish, observe the price movements that occur. If the market structure forms a pattern of a low and a lower low, pay attention to the RSI indicator's movement. If at the same time, the RSI indicator forms a low and a new higher low, this is a sign of a bullish divergence. To confirm that this is a valid bullish divergence, you can draw a trend line from the low to the lower low on the price candlestick, and also draw a line from the low to the higher low on the RSI indicator. If everything is confirmed, you can wait for the trend to change from bearish to bullish. If the trend changes from bearish to bullish, indicated by the candlestick color changing from purple to navy, make sure the RSI signal line has crossed above or is above the middle band line. If all conditions are confirmed, you can place a buy order after the candlestick closes. Place your stop loss at the last swing low. Use a target take profit with a risk and reward ratio of 1 to 1.5. Always maintain your money management and trading psychology because no trading strategy is 100% perfect. Click like and subscribe if you enjoyed this video. That's all, and see you in the next video.